welcome to This Week on Markets Today. I'm your host, Mbithe Mwema. We'll be taking a recap of what happened on the market last week. To start us off, the NSC, that is the Nairobi Securities Exchange, the weekly turnover was up 42% on a week-on-week basis to close at about 3.75 billion worth of stocks traded on the Securities Exchange. Now, what is becoming dominant, what is already known and it's nothing new, is the fact that only 5 counters are dominating activity on the Securities Exchange. Safaricom, Equity, KCB, East African Breweries, and a bit of BAT or Cooperative Bank if you like. Now the trades that are happening through these key counters are accounting for 73% of the total market turnover. In other words, anybody who's trading the NSE today is only looking at 5 stocks. 5 stocks are dominating liquidity and are certainly representative of the economy in terms of what is happening out there. That said, the other key corporate news that we're looking at for the day is in regards to Barclays Bank of Kenya. Barclays Bank has officially changed its trading name from Barclays Bank of Kenya to Absa Group. Now, the shares have been stalled on the stock exchange and they are not trading over the day as the process goes through changing the ticker name from Barclays Bank of Kenya to Absa. So there's no trading on the Barclays Bank stock. It has been halted as the management goes through the due process of changing the name from Barclays Bank of Kenya to Absa Group rather. It's not a material thing. Nothing has changed materially in terms of the performance of the company. It's really just a matter of operational changes that are happening in as far as the name is concerned. Now, this week being the second week of February, the month of love as the world would like to look at it, we want to see what is the love expected to look like on the Nairobi Securities Exchange. Can we see other names topping performance or not? And what is happening out there in the economy to signal to us that there could be any potential for investors looking at any other names outside of the 6 key names? In studio, we are joined by Mr. Abraham Kamau, who is the CEO of Miradi Capital, trying to understand the underpinnings of the economy out there and what, if any, effects we should expect to see on the Nairobi Securities Exchange. Welcome to the show, Abraham.
Thank you very much.
So the first story that we have to discuss is the fact that there are only 6 counters, rather 5 or so counters that are dominating activity. They make up 73% of the stock market in terms of turnover. We have Safaricom, we have Equity, we have KCB. These are the #1 recurrent names. Then we do have the second tier, that is East African Breweries. Do you see this changing anytime soon?
Unfortunately, no. But I think we've said this before. I think it's something we need to change very quickly.
Yes.
Because one of these very fine days is going to catch up with us.
Okay.
I think the concentration as NSC, I would be very worried about the concentration risk.
Okay.
That all activities concentrated around five counters.
5 counters.
So it means anything significant happening to any of those counters will impact our boss.
Yes.
Without a doubt. So I think they have to urgently, and I hope they are.
But how do you do it if there's nothing attractive in the market?
You see, in the short term, I don't think there's anything much you can do.
Okay.
But I think the long term, we must start encouraging more stocks to come to the boss.
We must, and the profitable ones, hopefully.
Yes, to come in.
Okay.
But again, the total cure comes from the improvement of the economy.
Yes.
If the economy improves, even the ones that are giving the profit warnings will stop.
Okay.
And start doing better. Then we have a better range. But right now, we're concentrating on those, and you can see they're mostly banks.
It's banks and telecom. There's nothing else.
And telecoms and alcohol.
Yes.
So the 3 things people still want to do.
So we call, we drink, and then we look for credit.
Yes, and then look for credit. So or we look for credit and come and drink it.
Yes.
Then we call people to come and drink some more.
Yes.
But now the thing is, after a while, even that will be caught up with.
Okay.
Because clearly the consumption is being cut down.
Okay.
So all the non-essential seems to have gone.
All right.
Now we are left with what is almost compulsory. But even this, after a while, we'll start feeling it from the telecoms.
From the telecos,
and the alcohol.
To feel the drug.
Yes.
Okay.
And maybe finally the banks.
All right. Let me ask this differently, and it's something that I've been pondering, at least from yesterday.
Yeah.
Can the Securities Exchange, can stocks alleviate poverty? Because now we are in a space where we only have 6 key stocks, and maybe let me just paint a background for this story. When I was wondering this, I was actually catching up on a slightly old story on the Equity Group and how it started and how it has grown over time. And this was a story that was celebrating the CEO for having been named as the most outgoing entrepreneur of the year for the Ernst & Young annual awards 2012. Now, the interesting story that came out of this was the fact that at that time, if anybody had invested in Equity Group, or rather Equity Bank back in the day, their return was 900%.
Yes, that's true.
And I looked at that and I'm like, okay, this is a unicorn. But that got me thinking, today, are there opportunities for me to become a millionaire? Because for a stock to move 900%, almost 1,000%, it means if I put in $1 million, I have $1 billion.
Yes.
It has grown to $1 billion or thereabout, and I have a return that comes in every day. Are you seeing any other unicorns or any other opportunities similar to that on the securities exchange today? And can we get there?
You see, even if you look at the equity story, the time horizon is almost 20 to 30 years.
Yes.
It's still a very long horizon. And that's normally the time it takes someone to genuinely move from a pauper to a millionaire. However, even if you look at those kind of stories, they are few and far between. So it means that story is not being replicated as it should.
Yes.
And that comes down to how we are growing from micro to to medium size to large corporates.
Why is it not being replicated? Because I know you do a lot of work with the MSMEs.
Yes.
When you interact with them, and I'm sure you're very familiar with the Equity Bank story, why are we not seeing more names that are coming out and not just focusing on their bottom line, but actually having an impact? Because if you look at the Equity Bank story, and I'm not being biased, but the facts speak for themselves. So this is a person who started a business in Moranga.
Yes.
And
my home actually is my home village.
That's your home village?
Yes.
They started by extending credit, which was a service that was needed at the time, to others. Then they started inviting the same people who are their customers to participate in their equity growth story. And now they're giving back to the community by ensuring that everybody from every constituency, as long as they're deserving, they have the opportunity to prosper in terms of their education and their qualifications. I mean, is it that we don't have people who are this exemplary in the MSME sector, or why is there such a bias? Why do you only have one out of so many opportunities making people wealthy on the exchange?
Let me start by giving a story.
Yes.
If you look at the Microsoft story, they say when Microsoft started, there were 3 people.
There were 3 people, okay.
But we only hear of Allen, who passed on the other day, and now Bill Gates. The third guy, we don't hear much about him. It is said that guy cashed out for probably about $11,000. And what he cashed out now would have been worth billions. So what am I getting at? I think with entrepreneurship, for you to grow from medium to big to great, you must be willing to bear the pain. It is how long you can bear the pain that makes you great.
Resilience and persistence.
Yes. So for most people, the pain just starts kicking in, and an equity investor walks in and gives you ridiculous terms, and you take them and you give away your business for free.
Okay.
Because it reduces your pain. Business that you'd have held on for 2 years and sold it for $1 billion shillings, you sell it today for 100 million.
So we are cashing out.
Yes, we cash out too early. Because it is painful to do business in this economy. That is the truth.
Why? I mean, okay, I know this is a conversation that is overdone when we talk about the MSMEs, but Abraham, we can't keep, as you're saying, having only 6 stocks.
Yes.
But the only reason is Chama Chajuza, I will only go for a good stock.
Yes.
So if we keep talking about SME and diverting funds to these MSMEs, are we just diverting funds into a rabbit hole? Is there any hope for us if we're in that space?
And then again, don't forget, very many people get comfortable with where they are. So you as an expert, you look at the business and you can see scale. But the person tells you, I don't want to scale. I want to stay where I am. So sometimes it requires the entrepreneur to be very visionary and again, willing to endure pain. Because yes, they can see where they're going, but they're like, you know what, let me cut my losses now, let me cash out, let me go. But if somebody stays the course, and if you look at even all these big guys, the Bill Gates and the James Mwangis, they've endured a lot of pain. If you look at how many times they went near broke or went broke and stood up, there are very many times.
So then are we saying the MSMEs, they cannot thrive in that
they can
space,
thrive.
Therefore we cannot make money off of them as investors?
But then again,
yes.
it's just the makeup of the entrepreneur.
Okay.
And more than even what you try to put into them. But I'm not saying that this story cannot be replicated. But I'm saying it may not be the solution to our boss problem.
It might. Okay.
Yes, because our boss problem is that the boss has to make it easy for people to jump into that counter and graduate, like what they're trying to incubate. That may work, but not for the short term. For the short term, we have to live and hope and pray that nothing happens to these 5 counters. Because if it does, the ripple effect will be felt in the economy.
What about some of the counters that are trading over the counter? So, for example, Family Bank. And I know for a while back, it was started to be the next equity, but then something happened to their financial structure.
They used to be in the same building. In fact,
Yes.
you could hardly tell them apart.
Yes.
Yes.
And then something happened to the financials, to the operational model. Then they stopped making profit for a little while. And we have seen stories, at least media stories and press statements with the fact that they're trying to get their act together. Now, the stock is trading at 15 shillings. I don't know if you look at it or do you ever hear it in chit chat? Would it be something that somebody came and told you, I have shares that I'm selling for Family Bank at 15? Would it be something that you'd want to look at?
Yeah, you see with Family Bank, their main problem has been, without putting it badly, the effects of the founder syndrome.
Okay.
You know, the founder is still there. And sometimes the founders have to know when to stop, when to get out. Like, I'll give you a good example. Like, you see, like Nairobi Women's. Denya, who was the founder, at some point has stood out and got an ECU. Even when this scandal of theirs was coming, he was not at the helm, because it reaches a point where you're no longer objective. Because when you're a founder, you are unable to distinguish between you and the business.
Okay.
There's some who are very good at it, but very few who are able to distinguish. And then you become very allergic to anything that is told to you that is against what you believe to be good for the business.
So
your objectivity is lost in there. So for Family Bank as a stock, I think Family future-wise would be a good,
maybe
would be a good buy. No doubt about it, because over time those things even out. And don't forget, there's a board, and this is a bank that is controlled by central bank, and so a lot of things are checked. So for it to grow, and you can see that the trajectory has already started, and even when you look at the financials here, they add up. You see, compared to the big banks that are making a lot of money, but the financials, they're not making a lot of money, but the fundamentals are correct. So it's just a matter of scaling.
It's just a matter of scaling.
Yes.
So I come back to the key question here. So then, is the way to get wealthy investing on the NSC?
I think in Kenya, you see, with due respect, for you to get wealthy through the stock exchange, then you must have critical mass of money. No, not the small guy.
What is critical mass of money?
Critical mass of money is critical mass of money and good knowledge of the market.
Okay.
You see, most people, the small guys who are at the stock exchange, most of them got in through IPOs. And they got in through IPOs not because there was information, because there's a way people, there's a fact that people are buying Safaricom shares, people are buying this share, people are buying that share. And most of them are still in. Or when they have a school fees problem, they cashed out. So they were not really investors. They just got in because people were getting in, and they got out because they needed to. But when you invest in stock exchange, you get in knowing that I have a price that I'm getting it on, and I'm going to wait until a certain price reaches. Okay. Even when the market goes against me, I stay.
So you stay in. You need a bit of.
But
grit.
Now, if you're not getting that kind of, because stocks is a marathon. It's a long-term game.
It's a long-term game,
Yeah,
but you have to.
Like now, when you talk about equity, you talk about that time horizon.
Okay.
Even Safaricom, the guys who went in at IPO and bore the pain when it went down almost to a shilling. Most people cashed out. Those guys who wait, and now they're laughing. But you can imagine at one point,
because at
80% of their capital had been wiped out.
Now it's 30 shillings, so there has been 6 times growth there.
Yes.
Okay,
Yeah.
Interesting. Then the other question is then, they at an economic level, when we're looking at how the economy is doing and looking at how the Nairobi Securities Exchange reflects that, there's a lot of talk of let's then divert funds to the MSMEs. And I want to imagine that the hope is this MSMEs can mature and become investable opportunities. I mean, Abraham, what I'm trying to get at is we're always looking at the NSC, we want to open accounts, we want to put money there, we want to invest. Then, is that the right thing, or should we go open our own businesses, or even, should we even go give the money to the government? Because the government is now opening a 25-year paper, reopening it, and giving money at 13.4% return. But then again, I would need a lot of money that I don't need.
You need a lot of money and the horizon.
Yes.
So basically, you're talking about people who have money that they don't need tomorrow. You're looking at, that's why pension funds will always go for those kind of money, or people who have long-term goals. But 80% of Kenyans don't have long-term goals. They need to see
they
tomorrow.
don't have, or they can't afford to.
They can't afford to, so they don't have them. So they need to see tomorrow.
Yeah.
So when you talk about a 1 year horizon, it's too long.
Yes.
So again, we come down to SMEs. What is the problem? The problem is, one, they are not documented. Documented in the sense that the government does not know they exist.
Okay.
They are there. They contribute to in whatever way they are doing. But if you cannot count them, what can you do to them?
That's
So
true.
we don't know where they are.
Okay.
We don't know who so now they've come with regulation, now they want to have a registrar of MSMEs. But the thinking that the MSMEs will go look for the registrar, it will be the other way. It actually will be the other way around. The registrars go look for them.
Which will not happen.
Yeah,
so
which will not happen.
that-
But then they think that as long as the registrar sits, there'll be a queue outside his office, people want to register. If they're given reason to believe and to know that once you're well documented, people know what you do and what you want, then we develop a register. Then people can come and pick and choose. I want to meet this person. I want to meet this person. But so the problem we have is, and some of these people, they don't even need money. They just need technical expertise.
Exactly.
Somebody coming in and telling them that this can be done this way or that way. Yeah.
Interesting. All right, let's just take a short break. We will be back shortly. And what we're trying to answer, do you think the Nairobi Securities Exchange can alleviate poverty? Do you agree? Do you not agree? Is there anything more that needs to be done? We're trying to have a thematic conversation just around this to see what are the key considerations that we need to be looking out for. Engage with us on Twitter. That is Metropole TV, or you can also engage with me directly, and that is Mbithe Mwema. Don't go anywhere. See you after the break.